Welcome. So now we on the chart. Time frames is direct relationship to a stock chart, analyzing a stock's price movement, where it was, where it is, and where it has potential to go. That's what time frame relates to. We have some important time frame representations. We're going to cover what time frame means. We're going to cover the daily chart time frame. We're going to cover the 4-hour chart time frame. We're going to cover the 1-hour chart time frame. We're going to cover why you should zoom out first. We do not want to have tunnel vision. We want to know where the overall price movement of the stock we are interested in has potential to go, and what trend is it in currently? Is it in the uptrend? The chart timeframes will help you to know that, to have the best idea of where that asset price is currently. The higher timeframes gives more confidence. You can believe in those more. The daily, the 4-hour, the 1-hour, okay? They matter more than the smaller timeframes. A lot of traders utilize the smaller timeframes to take advantage of precise entries, pricings. A time frame simply just tells you how much time each candle represents. A daily candle represents 1 trading day. A 4-hour candle represents 4 hours. A 1-hour candle represents 1 hour. So we have an American trading session. Our session starts from 9:30 a.m. and ends at 4 p.m. There is an Asian trading session. There is a London trading session. Options contracts do not trade on the post-market, London, or pre-market Asian sessions. That is futures trading, okay? We do have that in the community as well. Again, back to the time frames on the charts. As a beginner, one of the best habits you can build is starting at high time frames and then working your way down. Starting at the daily, go and plot your support and resistance level, seeing what trend you are in, right? Does this stock prices in an uptrend, a downtrend, or consolidating? Then you drop down to your 4-hour chart. Make sure you have confirmations from your daily chart. Then you go down to your 1-hour chart. 1 hour, 30 minute, 15 minute is going to provide you more candles, more data for you to see structure a little bit more. Starting at your top time frame, working your way down, you're looking for confirmation and consistency. Okay, you're looking for confirmation that your asset you're looking at, price, is in the trend, whichever trend the higher time frame says. The lower time frames have to respect that and confirm that as well. If you see any discrepancies, then you need to pull back and hold on and reevaluate, all right? Because we get paid in our options contracts based on knowing or having the right trend. Our contract relies on that. We are in a call contract saying that price going up, that stock better be in the uptrend. We are in a put contract saying that stock price is going to go down, that stock trend better be in the downtrend. Okay, so these trends, which is the direction, is important. All right, so the higher the time frame gives us our confirmation of the direction the price is in. The lower time frames confirms that. As a beginner, one of the best habits you can build is to start at the high and work your way down. First, look at the daily chart for major areas, support, resistance levels, the trend. Then the 4-hour chart for structure, higher highs, higher lows, higher highs, higher lows. Then the 1-hour chart for better detail in the structure. If you only stare at one small time frame, a 5-minute, 10-minute, 15-minute, you can miss the bigger story and take weak trades. Zooming out gives you context. Context protects you from dumb trading and emotional execution, being on the opposite side of the trade. We don't want that. Let's go over some time frames and show what we mean. So we see NVDA. We just left off NVDA. So seeing the time frames, we're going to look for confirmation. So we have an uptrend. Current price of NVIDIA Friday, April 24th, 2026 is this green candle, strong green candle, bullish. We have an uptrend. So this was the lowest price of NVIDIA, which was Monday, the bottom right there, Monday, March 30th, 2026. This shows us a strong uptrend. We made new highs here and we are in an uptrend. So now when we go to the 4-hour, Now you see, we can see some highs and lows. Okay, we look from this low to see we have a high level. All right, so let's mark that high level right here. Make it a little thicker. Let's make it red. That was the high level, a resistance level. It makes a high, turns into a resistance level. Price rejected under it, came and made a low. Let's mark our lows, because on uptrends, prices make higher highs and higher lows, meaning the higher low should never come lower than the prior low. The red is the resistance level it made, then it resisted, came down, made a support. Bounced off of that support, broke through the resistance, made a new high, breaking above this high, made a new high here, which is now our new resistance level. Came back, that prior resistance level turned now support. Didn't come all the way to it, came close to it and bounced, broke above that resistance level, made a new high, made a new resistance level, broke above that, came here, made a new resistance level, and then that resistance level turned into support. Broke above that resistance level. Okay, so that's all it is. Making on uptrends, you are making higher highs and higher lows. So that 4 hour shows that. Now look at the 1 hour. All right, so we go to the 1 hour to see if we still in that uptrend, and we are. So now on this 1 hour, you see it rejected at this resistance level. Now we need to watch what it does at this support level, prior resistance. We need to watch and see if it can bounce off of this prior resistance, now support level. High probable it bounce off and continues to go up, making a new high, breaking above this 210 high. That's beautiful. And that's our 1 hour. All right, let's go. We got more.